Hey again, good afternoon. Neil here with end of week wrap up. And we'll go good news, bad news, I guess. Good news is you shouldn't have been caught off guard, I guess, because we were kind of looking for the very possibility that going into this expiration, we could possibly see this kind of volatility. The bad news is, it comes in pretty hard. And so S&Ps are down 100 and change today, over 1.5%. But look at the level. Look at this. It's just amazing, right? Back to the same level that we are talking about weeks ago, and it's that closing swing low from the 17th of January. This is middle of February. We're talking, this goes all the way back to, this is a voodoo level and line of David's stars. This is when this happened on that day. It's just amazing to me. But when this happened on that day, on the 17th of January, David said, hey, this is a really important level. And boy, has it been. And it's really pretty amazing. So here we are back in range. Okay, so arguably one could argue successfully, frankly, that you could go all the way back to the November the 7th, coming out of a lower distribution, ramping up into this upper distribution. And you could argue that that's the beginning of it right there, as we ramped up from lower distribution into starting to create this upper and back and forth and up and down, sideways, or whatever. And then another way to look at this that I've been kind of looking at it is, I think equally as important, or maybe, arguably, is, you kind of start this really tightly wound sideways range microcomposite, or, small range distribution here from January, end of January, say beginning of February or whatever, right? So either way, you can see that it's really the hinge point here for all of that trade. And now the question, here's where you go from here, all right? Much like as this candle broke on the 18th of December, I look at that and you see notably how distinguishably different this is from all of the, look at the size of that candle. And it's vastly different from all of these little tiny days, kind of leading into this. Well, I call that a benchmark / reference candle, right? So then you get a retracement against it, and then you get a continuation to follow through. Well, I think this is the same, right? You get a lot of these little, and then boom, right? So this big thing here. So probably reasonably expect about the same. You get a retracement back against it, call it 6100 ES or something like that, and then a continuation. And so I would imagine, we'll see. I got it going, 59.40. It could go 58.40. I don't know, but I got it going. My kind of first sort of target, and there's a reason for that too. If you take from the low here on the 13th to the high of the move, that's a 618 retrace at like 59.40. And if that doesn't catch it, well then why not come all the way down, into another 100 down to 58.40. We'll take it one day at a time, but to catch you up to speed, we're back in range. We're back at this decision line. We're in a benchmark reference. So we get likely, I would imagine, you get a retracement against that and then a continuation. Question is, how much continuation? Of course, I don't know till we get there, but I have a target, 59.40. And then when we get there, we'll see, okay, more? Question mark. And if so, okay, well, then we'll be talking about, like 58.40. That's it. Hope it helps, and I hope it has helped, right? Because a lot of people are caught off guard by this. This is one of the two, maybe few, but two major expirations that I know to like be careful. And last week, right? Last Friday, we said, hey, look, it's starting on not first part of the week, you'll be fine. Not first part of the week, you'll be fine. You get to the latter part of the week, starting probably Thursday, and look out. And well, here it is, right? So We'll see how we get, where we get from here, but you know what I'm looking for, a little up and then, stuffed and continuation. Take care. Good trading. See you again next week.